Hi everyone, hope you're all doing well, and today I talk about the free UK stocks to buy April 2021 edition, and this is where I'm talking about free stocks that I might buy in the month of April. Now, like I've said on previous videos talking about UK stocks, I've not talked about them that much on the channel in the last few weeks just because the UK stock market's been going up and up, and when things tend to go up and up, that's not when I'm buying. I tend to buy when things are going down, so I'm kind of hoping we get some opportunities with the stock market going down, and these are free at the moment that are probably the more interesting ones to me, but I would like valuations to drop a little bit more than what they are at right now. I've seen a few of you guys throwing a few stocks with me as well. There's a few interesting ones. I'm kind of thinking whether or not I do a video talking about every individual stock. So I've seen like a few like Team 17 being thrown at me, and a few other like recovery plays. So I'm debating whether or not you would like to see like a video that's just on that company, or whether or not I throw like 5 companies into one video and do like a 2 or 3 minute like speed dating sort of style video. So you guys let me know in the comments what you'd like to see. But yeah, I've seen a few of them, like Ashted as well. That was another one that's mentioned. So yeah, let me know which one you would like to see, and whichever one's the most popular one I will do. But we'll go through these free UK stocks that I'm buying. If you do want to know when I'm buying and selling companies, make sure to join the Patreon. Link is in the description. Now, one company that's been featured on this series quite often has been S4 Capital, and I'm going to say right now, S4 Capital is not making the list today. It's one that's been featured probably on the last 3 episodes, but the stock is now up like 20% or more. So because of it going up now, and my average being pretty good, it's not going to get them mentioned in this monthly series. So we are talking about another one that's a little bit different, that's not been mentioned before. But I did notice, as always on YouTube, you know, you're always going to get 1 or 2 of them people that do come out and give you a little bit of stick. And one of the things that I did see is that someone mentioned on the last free stocks to buy UK video, that someone mentioned that I mentioned S4 Capital quite often. And the reason why I'm mentioning S4 Capital so much on the channel is because I think it's an amazing opportunity and the best UK stock to buy out there. And as a long-term investor, I'm going to buy that over a period of time. It's not going to be where I mention it once and I'm never going to talk about it again. I'm never going to buy it again. You know, this is a long-term investing channel. So if you're probably struggling with that, it's probably not the right channel for you. But yeah, that's the reason why S4 Capital was on the list so much, because I was like, you know, it's such a good buying opportunity. And if you did buy, and you know, you're watching the series a few months ago when you bought S4 Capital, I'm sure you've got a nice average, and I'm sure your shares are doing quite well. So just something on that point of view. I normally don't really respond to them sort of comments, but I noticed it got a few likes as well, and I thought, you know, I just mention that right here, you know, about that. But yeah, enough of that. We'll get on to the free stocks to buy April 2021 edition. So number 1 is a new company that's never been featured on this series, and I've never talked about it on the channel before. And actually, I don't know who it was, because I would give you a shout out, but someone actually sent me a message on Instagram, which if you want to follow, the link is in the description. But someone sent me an Instagram message about this company about maybe a month or 2 months ago. So sorry, whoever that was, I can't remember, but they said this one to me, and maybe I should have bought when they showed me it. But this company is called the Best of the Best, or what its online branding is and what it's always shorted to is BOTB. So this is an AIM stock, so it's a smaller market cap company. But basically what this company does is it gives away dream cars every week, and also it's been doing a lot more lifestyle prizes, so like watches, cash prizes as well. And basically this company was a company that was mostly like in airports, so you could enter the competitions at airports. You would pay your fee, you'd try guess where the ball was, and if you were the closest, you'd win the prize. But recently what they've done is they've stopped doing a lot of like these airports, and they moved to an online business model only 6 months ago. Now, the perks of going to an online business model in the last 6 months has been very clear with what the company has brought out in January. So if we look on their recent interim reports, their total revenue for the 6 months was 22 million. Compare that to 2019, that was 7.6 million. Yeah, that's right. That's nearly 3x in a year from switching to an online business model. Crazy growth. And as well as that, if you look at the profit difference, you can see before tax 2019 1.38 million to now 6.8 million in profit. So the profit increase is insane, and the revenue increase from going to an online business model has been absolutely crazy for this company. So moving to an online business model has increased revenue absolutely huge, profit huge, and remember, this is only the last 6 months they made this change. Which is absolutely crazy. The cash on the balance sheet is getting higher and higher. They're paying a bigger special dividend as well, so you're also getting a little bit of dividend. a company that's growing revenue absolutely huge, and it just seems like the switching business model, like the business model they had before, we've actually been there at airports, you know, that model they've had for the last 20 years, getting rid of that, let's go to online only, has been absolutely amazing. You can see in the evidence in the first 6 months, look how well it's going for them. As well as that, these guys have took social media to a serious level, and they've grown the social media is absolutely huge. Their Instagram following is quite big, and as well the Facebook following is quite big, and that's really helped them. And since they've actually reported their interim results that I showed you, their Instagram and Facebook following has increased another 20% since these interim results, which is something that I checked on. So I guess you could give that a little shout out to the Facebook shareholders as well, that is showing how well Instagram and Facebook is doing as well. Also, I've got the classic thing of that I've went onto their Instagram and Facebook and now I'm getting 1 million ads for them, which does show their advertising is working quite well, I guess. But yeah, you can see here the turnaround from going to that, you know, in person to an online competition only. The growth is insane on the revenue and profit front, and also getting a special dividend as well. It looks very promising, and I think as well when you consider, you know, that's only in a 6 months period, it's pretty good. Now, the only negative it does have is that people have realised this, and the share price has gone up absolutely huge. Congratulations if you were invested into this last year, as I'm sure you're sitting on a really nice gain. Don't know if any of you guys have invested into it, but yeah, it's been on a crazy run. And that's the only thing is I look at this company now and I'm thinking, okay, the company's been on a very good run, which, you know, I don't like picking up companies when they have done that. But when they did report results like that, that is always going to happen. Now, the funny thing is this company is growing profit at a huge range and revenue at a huge range. And now when I've actually run the numbers on this company, if we take a forward PE for this company, it actually doesn't work out too bad. It actually works out as a forward PE of 23. So to pick up a company at that forward PE with the revenue growth, with the profit growth, doesn't seem too bad of a valuation, even though it's been on a crazy run. And that's the one thing that I'm kind of thinking about right now, and why I've not just bought it just yet, but I'm considering it, is that, yeah, the share price has been on a crazy run, but actually when you start running the financial numbers on it, it's actually pretty good on a forward P. It's sitting around a P of in the 30s, and for a UK growth company to be in the forward PEs of 20s or a P of 30, it's a pretty cheap valuation for sure. So if you just hop onto a simple Wall Street, you can see here this is the revenue. You can see that it's always steadily grown revenue at a decent rate and profit at not too bad of rate, but you can see the jump that we're going to get here now because of the revenue and the profit growth, which is amazing. And if you look at the balance sheet here, zero debt to equity, which is really good. You look at the cash, there's 11 million in cash as well. So it's very healthy, no debt, a lot of cash on there. And that's also why they're paying a little bit of a special dividend as well. And one little thing that I'm going to say here on the ownership side of it, the actual CEO is the founder, and also he owns a 50% stake in the company as well. And one thing that I was really surprised by, and I don't know if Simple Wall Street just have this wrong, that the company's been on that much of a good run on the share price and he still hasn't sold any shares, which I thought was really interesting. So I guess that's another little positive there. So overall, the best of the best is really interesting me, because I think the growth it's put in 6 months only is very attractive, and I think that will only continue to grow over the next few years as well. You know, this has only just gone online, so you look at what results they put in from being online for 6 months only to now what could they do over 2, 3, 4, 5 years. It could be pretty big. And like I said, the share price has been on a good run, which is my only negative to get into it. But like I say, when I run the valuation numbers and the growth and the profit growth they'll have, it actually doesn't seem too bad. So it's one that I'm considering. I don't know if I pull the trigger, but yeah, it could be one that does pop into the portfolio sometime this month. Number 2 is my newest addition into my UK stock market portfolio. So S4 Capital was the one that I was buying quite heavy, and I stopped buying that one because it's been on a good run. And the newest one that I've been buying is these guys, which is Hotel Chocolat. So I've talked about this one, I think once on the channel before, maybe twice, but this is one of my newest additions into the portfolio. So basically these guys, I thought, I'm not going to buy a company which basically has high street shops that sells chocolate. I thought it's just not going to be a business model that works and will continue to grow. But actually when you look into the financial numbers, they've actually done okay historically. But it was the recent 12 months that made me really change my mind on this company. When you look into the interim results that they recently brought out, their online sales were amazing. In fact, their online sales were that good, it nearly covered the shutdown of the actual retail locations. And online sales are growing absolutely huge. So I thought that's really good that they've got really good online sales. Now, to think that the online sales is nearly covering the whole retail shutdown, and then you consider retail is going to open up next well, in the next few weeks. They're going to get online growth, they're going to get the boom in retail, and I think a lot of people as well will be keen to go out shopping as well. And I'm not a big fan of brick and mortar stores, I normally stay away from them, but you're adding now the normal retail that's done so well for them for the last few years, the online sales they currently have, and then the company has also changed their game plan. So basically Hotel Chocolat was only a retail in the UK. They've now expanded out of the UK, which is really positive. They've moved into the US, which is growing at a great rate, and they've also moved in Japan as well, which is growing at a crazy rate as well. So now you have the US growth, the Japan growth, and then as well, if they move into other countries as well from them, which they said they will do in a few years time, they're just getting set up. You can't jump from being in one country to every country overnight. It takes a while to build up. But if they start moving to maybe a new country this year, one more new country the year after, the growth will be very good. So I like what the company is doing here with the online growth, the retail growth, the international growth as well. And also, I think the products are really good. I use the products quite often, and I think the products are really good. So when you look at that, you need to take into consideration financially, the profit will grow, the revenue will grow. And also on a balance sheet point of view, the balance sheet is really strong. There's a lot of cash on there. There's no debt on the company. And as well as that, you're also getting a company that's founder-led and also, once again, has a big holding in this company. So overall, I think this company will do very well from how it's done its online growth the last few months, its international growth, and the retail boom that will happen. The only one negative I do have about this company is I do not believe, when the other companies I mentioned, I believe there's a lot of upside. This company in particular, I don't think will have huge upside because you're not buying it on a massive drop, and also the growth's not a crazy rate. Don't get me wrong, they're going to grow at like a 10% revenue growth rate, which is still pretty good, but I don't think it'll ever be a company that you'll expect to double your share price in the next kind of 2 years. Maybe it'll do that over a period of 3, 4, 5 years, but it's not going to be a company that has crazy growth. But I still think it's a fantastic company with a very good game plan, and in the course of the long term, it will go up in share price. So yeah, I don't think there's not crazy upside like in SVR Capital, but at the same time, it will go up in value with what it's got in place, and that's why I'm buying it. And number 3, which is always covered up by my shoulder, which is Aston Martin. So I've still not bought some shares in this one, but I am going to mention this one once again because I do think it could be an interesting one. Every so often in the UK, especially with what's going on right now, I like picking up some recovery plays. So like Card Factory was a good example of one that was really beaten down, priced to bankruptcy, came in, and it's not an amazing company, but when you look at the value it's trading at, is probably a lot lower than what it should be. And Card Factory is an example of picking that up, and then it's gone up in value and it's not traded at bankruptcy levels anymore. And I've been trying to go through a few of them. I've considered a few ones. Rolls-Royce was kind of interesting. There's also, I looked into Superdry, still not sold on that one. There was Ted Baker, still not fully sold on that one. But one of the other ones that were really interesting to me was Aston Martin. And this company, I think I just need a little bit more confidence to go into it to make sure the turnaround play is happening. Even though I've seen a lot of the right things happening with this company, I always want to see financially things improving as well. And it's starting to get there. I think I just need a little bit more confidence, and I might be buying this one. So we might be this month, we'll see what happens. But yeah, I'm kind of coming into this one from a turnaround play. First of all, this company IPO'd, I think it was 2018. And if you look at the stock chart for Aston Martin, it's absolutely horrible. It's lost so much value since it came on its IPO. And yeah, it's basically valued at bankruptcy levels. And that's probably because it's nearly gone bankrupt 8 times before. So yeah, it has had a bit of a massive slump with the share price. But hopefully this time, 9th time lucky, it might work out for them. And like I say, hopefully they can turn it around. So first of all, the first thing that kind of changed with this one is the total management clear out that's happened. Investors have come in, especially Lawrence Stroll. Lawrence Stroll has taken a big, massive stake in this company, and he is now at the top of the list of running this company. Massive cash injection, so the balance sheet is a lot more solid than what it was done. Lawrence Stroll, as well as how he's done previously, has a very good track record, and what he's doing inside the company at the moment is already interesting. So first of all, AMG or Mercedes have took a stake in Aston Martin. They've also given them, or will give them, some of their technology for when we have this EV circle come in, and they won't be so far behind on the EV side of it. Also, you got Mercedes there if they ever want to buy a bigger stake, and they're interested in them. As well as that, also the old CEO of AMG from Mercedes has come along to Aston Martin, and a lot of the other Mercedes team has moved across as well to help run this company. So hopefully that is the turnaround that needed, because the worst thing about this company was the management. As well as that, they have the DBX that looks like it's selling quite well. You also have the economy opening back up, which hopefully will help sales, and revenue and profit will move in the right way, because for so long this company hasn't done that well on the revenue growth, and also it doesn't have a great history of pulling in profit either. So hopefully the DBX sales do help that going forward, and like I say, on the balance sheet wise, at least it's had a little bit of a cash injection now as well, which gives it a bit of a stronger balance sheet. As well as that, they have started moving back into the F1, so they've got an F1 team now. Some questionable decisions that they've made with the F1 team. I guess that's just down to my opinion. They've got Vettel in, which I believe is good for the branding side of it. Personally, I would have kept Perez because he's a better driver in my opinion. But yeah, they've got Vettel in. There's rumours of Lewis Hamilton coming in for the team, which, if you had Lewis Hamilton, branding, Aston Martin, British, it could all tie in quite nicely as well. But yeah, they've got an F1 team which should help with the public image out there as well, which should be pretty good. Some people also say that the James Bond movie might help Aston Martin sales because of the ties there. Personally, I would disagree, because the last 40 times they've made a James Bond movie, it doesn't seem to have helped Aston Martin from going bankrupt the other 8 times. So I'm not going to put that one on the list. Sometimes people give me that one and I'm like, I don't think it helped the other 8 times. So personally, I'm not going to include that one. But I think the F1's kind of different. So a big sport, obviously, having your branding there, your merchandise there should help quite a bit as well. And yeah, I think the management team, from what you've seen, how they've turned it around so far, new management team in, successful management team as well, and hopefully the DBX does really pick up the sales and it does go okay. But yeah, this one I'm considering as a turnaround play, especially when you see how much it's sold off. But yeah, I'm considering it. I'll see what happens. I know a few guys have already taken a punt on this one. For me, I'm just thinking about it. It might be the month that I buy it, so I'll leave this one at number 3. But those are the 3 UK stocks to buy April 2021 edition. I hope you enjoyed it. If you did, smash the like button. If we could get to 400 likes, that'd be absolutely amazing. If you are new, subscribe as well. That'd be amazing as well. It is free. And I'll see you in the next video.